So as promised then, more on Donald Trump's plans for his first 100 days. Our business editor, Stephen Carroll, is here. Stephen, the US president-elect saying he's abandoning this key trade deal with Asia. Not a surprise, is it?
No, hopes had been fading for some time of this deal becoming a reality as both Hillary Clinton and Donald Trump on the campaign trail expressed their opposition to the Trans-Pacific Partnership. It was an ambitious trade agreement by 12 countries on both sides of the Pacific that took a decade to negotiate. Without the United States, though, TPP can't come into force, but that may open the door for a new deal led by China. Alison Sargent reports.
It would have been the largest global trade accord in history. The Trans-Pacific Partnership, or TPP, was signed in February after roughly a decade of negotiations. It planned to group 40% of the world's economy, involving a dozen countries. The deal is meant to define the region's trading standards, putting pressure on other nations to play by U.S. rules. But without the United States, its future is uncertain.
The TPP would not make sense without the United States. It is impossible to renegotiate. Losing the US would destabilize the basic balance of interests.
For many countries who already have deals with each other, the TPP was above all an opportunity to trade with the United States. If the deal falls through, Japan is seen as suffering most, along with Vietnam and Malaysia. And some analysts warn pulling out of the agreement could cost the U.S. political leverage. The TPP had been the cornerstone of Barack Obama's so-called pivot to Asia. If the U.S. abandons the trade deal, Asian Pacific leaders could make a pivot of their own, toward China. Beijing has already begun courting Pacific Rim leaders to participate in a rival trade pact in the region.
The Chinese president is getting countries which had previously signed up to TPP, which is American-led and excludes China, to look at the free trade area they're proposing that they will lead.
U.S. President-elect Donald Trump has called the TPP a potential disaster, saying it threatens American jobs as well as the nation's sovereignty. But some economists warn it could mean higher costs for U.S. importers and increased prices for consumers.
Well, meanwhile, Stephen, the market's much more preoccupied, if you like, with the price of oil.
Yes, investors focused on a meeting of the OPEC group of major oil producers. That's happening next week. Now, they're going to be discussing details of an outline agreement from September to limit oil production in an effort to boost prices. Oil prices have slumped in the past 2 years because of oversupply in the market. Hopes are rising now that a deal to limit that supply glut will be done next week. That, in turn, has sent prices soaring on Monday by 4%. Today, we're seeing the climb continue in trading. The Brent crude benchmark for international oil prices up over $49 a barrel, back around a level not seen since last month. Of course, those markets really hoping that they're going to get a big boost running up to that.
Yeah, that in turn helping to boost stock markets.
The three major Wall Street indices, that's the Dow Jones, the Nasdaq and the S&P 500, all finished at record highs on Monday. Generally speaking, shares have been having a very good run since Donald Trump was elected, but it was energy companies that led the gains on Monday, pushing those indices to their record levels. That's, of course, down to oil prices. In Europe today, shares continuing that trend. All the European markets opening in positive territory. Oil companies doing well, as you might expect. Over in Asia, it was a similar picture as well of gains across the board. Markets pretty unmoved by that news from Donald Trump that he's not going to, or that he would abandon the Trans-Pacific Partnership. Markets in Japan had fallen early on in trading after the earthquake news, but they did finish in positive territory. Just one piece of corporate news for you. The aerospace supplier Zodiac says that it plans to return to its record profitability within the next 4 years after taking action to cut costs. The French company's operating profits fell by 14% in the last financial year, but its sales and revenues grew. Investors not impressed, those shares in Zodiac Aerospace down 7% at the open in Paris.
And finally from Stephen, the British economy might not be showing many negative effects of the Brexit vote yet, but some people there, apparently anyway, are feeling it in their pockets.
The number of millionaires in Britain in dollar terms fell by 15% in the 12 months up to the end of June, according to the Global Wealth Report from Credit Suisse. Now, the bank says that household wealth declined by 10% or $1.5 trillion as a direct consequence of the Brexit vote. That's despite the fact the study only counts 7 days after the vote for that drop in wealth. Now, the exchange rate is mostly to blame for that. Sterling slumped 15% in the couple of days after the Brexit vote. Plus, we had a huge plummet on the share markets as well. By contrast to the UK, Japan saw the biggest rise in wealth over the period, up by almost 1/5.
It's quite an amazing figure, though, 10%, isn't it? Just in a few days. Thank you, Stephen.